In this chapter, you will learn to monitor and control construction costs for materials, labor, subcontractors, equipment, and overhead. Also, you will learn to measure the success of the project by determining the schedule performance index and also calculating the cost performance index. These are two measures that are used to determine how profitable a project is. First of all, materials. The purchase of materials is actually executed through the preparation and the submission of a purchase order to the vendors. Basically, the way it works is the project manager requests a purchase order to the accounting department, and the accounting department typically prepares the purchase order and issues that purchase order to the vendors. Sometimes the project manager may have some limited authority to prepare and issue purchase orders. Some companies may set limits in the amount of money that the project manager has authority in issuing a PO. A limit could be in the range of $5,000 to $10,000 or perhaps more. The purchase order is prepared again by either the accounting department or the bookkeeper, or perhaps directly by the PM. The materials will be ordered, and on the PO will indicate the quantities of the material, the description of the material, the unit costs, as well as the total cost of the order, and that PO is issued to vendors or suppliers with a copy kept by either the PM, and also another copy will be sent to the accounting department so that it could be entered in the accounting system. Once the materials are received, the PM or field personnel will verify that the materials received match the order, and they will then proceed to process the payment for that vendor. The PM will ultimately issue the approval for payment. Labor costs. Labor costs are those costs incurred by the workers on the job site. Those workers are pretty much the tradesmen working hired directly by the company. They could be carpenters, electricians, laborers, machine operators, but typically those labor costs are the ones involved with the employees that are paid on an hourly basis. Each foreman would be responsible to prepare time cards by the end of the week for each employee that was assigned under that foreman's supervision at each job, and then on the time card the foreman will note the amount of hours that the employee or worker spent in the field, the hourly rate, as well as the a description of what kind of activity the worker was performing on the job site, so that they can correlate that activity to the cost codes for tracking purposes. Here's a description how the time card is processed. Essentially, the time card will be originated in the field, signed off by the superintendent or project manager on the job site. It will then be sent for processing at the payroll office with the approval of the PM. Employees will be paid, and also there's going to be data entry on the amount of hours as well as the cost associated for each job and under each cost code. Subcontracts. General contractors relied quite heavily on the use of subcontractors. Particularly building contractors will hire subcontractors to perform the majority of the work. Subcontractors need to be paid on a monthly basis, and that requires for the GC or the general contractor to submit progress payments to the client or the owner so that they can establish that cash flow. Once the general contractor gets paid by the owner, then the general contractor would process payments towards each of their subcontractors. The work is often measured in terms of a percentage of completion. The work is measured on how much material, how much labor, equipment has been put in place at the particular project, and that's measured in terms of a percentage. With the approval and verification of the architect or project engineer, the contractor would then be paid, and then once the contractor is paid, the contractor will process payments to subcontractors. The use of subcontractors requires a contract. That is pretty much the agreement between GC and sub. The contract will indicate the total contract amount in dollars and cents, and a description of the project with a scope of the work. In order for the contract to be effective, the contract will have to be signed by both contractor and subcontractor so that the work can proceed, and as the work progresses, there will be bills generated, typically on a monthly basis. Every bill needs the approval of the project manager before the payment is processed by the accounting department or the bookkeeper. In terms of equipment, the equipment is also a cost or an expense to the job. The equipment costs need to be monitored and controlled with the use of time cards. Similar to the labor time cards, the equipment hours are monitored and tracked. The amount of time that the equipment is assigned to a particular job is also monitored, and the equipment manager or project manager may be responsible to complete those time cards out in the field, depending on what kind of equipment they use for a given time frame, and then that information is sent to the accounting department for data entry so that they can determine the overall costs of the equipment for that particular job. Other costs involved overhead costs, and I think we need to distinguish here. There are two types of overhead: the overhead that's generated in the field and the overhead that's generated by the main office. The overhead in the field could be the salaries of the project manager and superintendent. If the job requires a temporary field office, then the expenses related to that field office, for example, the expenses in rent, utilities, and any other type of costs associated with that field office will be part of the field overhead. The general or company overhead, well, that relates to the main office expenses. Under that overhead, we can have salaries of the cost estimator, the company owner, the staff that's needed to run the company. If the company rents office space, then the rent will be considered a general overhead expense. If utilities, insurance for the company, those expenses will be under the general overhead. It is important to keep track of the profit on a job-by-job basis. Again, that falls under the responsibility of the project manager. The project manager will require weekly updates of job cost reports so that he or she can compare what was estimated or what was in the budget versus what is actually being spent on a weekly basis. Again, the ideal time frame is a weekly basis. Doing it on a daily basis, that's just simply not possible or counterproductive. But also doing it in a monthly basis or even a quarterly basis, certainly that it does not help with the company's tracking objectives of keeping track of the finances. So the weekly updates is what we recommend to monitor those expenses for each job. Another tool that is used in terms of managing construction costs is the cost loaded schedule. That's a project management tool that correlates the cost of the job versus the time frame of the job. Okay. A sample of that you will see on page 102, where you can see the list of schedule of value items totaling $429,000, which has a duration of which the project has a duration of 10 weeks. So that is another tool that is used in order to be able to monitor the expenses, again looking at the budgeted or estimated expenses versus the actual expenses for each cost line item on a week by week basis. So we take a look at the schedule and the cost reports in order to establish the success of the project. In plain terms, if the job finishes on time or ahead of the schedule, well, we can say that the job has been successful. By the same token, if the job has costs higher than what actually was estimated in the beginning of the project, then, well, it was not a successful job. So we can say that the project was over budget. The budgeted cost of work schedule, it is what we use to calculate the SPI, or Schedule Performance Index, along with the budgeted cost of work performed. Essentially, that is the actual cost versus the scheduled cost. Here's the one performance index. Again, that relates to the time frame of the project. We say that the SPI is when the SPI is equal to 1, the project was on a schedule. If it's greater than 1, was ahead of a schedule, and if it's less than 1, was behind the schedule. The cost performance index, that is another gauge to check the financial success of the project. That CPI compares the BCWP, or budgeted cost of work performed, which would be your budgeted item or budgeted cost over the actual cost of work. So in simple terms, you compare the budgeted cost over the actual cost. If the CPI is equal to 1, then we can say that the project is on budget. If it's less than 1, it's over budget. Anything greater than 1 would be under budget. That is essentially the content of this chapter, and please take a look at the examples. I will have another video to just go over an example related to the coast loaded.